good afternoon, and a warm welcome to today's edition of Real Estate Today, brought to you by Ubosi Ele and Company. We are proudly celebrating our 35th year anniversary of service to Nigerian real estate profession. My name is Olusanjo Fawale, and I'll be moderator for this session and this afternoon. So it's going to be a wonderful time, and I assure you, tell your friends to join in because we're just about to start. They have not at all. All right. Okay, so don't miss anything. So call your friends to join us, that the Real Estate Today is just about starting right now. And so get your friends to join in. All right, so just before we begin, a few housekeeping notes for our audience. Just want us to know that, as usual, you'll be using the Q&A panel to submit your questions. If you have questions, you can submit your questions while the session is ongoing. And also, we may have the privilege to take one or two questions from those who are also joining us. You can be promoted as one of the panelists so that we can get you to ask your question directly if you so want to do. All right. So once again, you're welcome to this monthly Real Estate Today's webinar, and I can assure you it's going to be a wonderful time this afternoon. Like I said earlier on, get your friends to join us from anywhere. They've not missed at all. It's just about starting right now. Get them to join in. All right. Before I bring in the speaker today, a wonderful man, before we bring him in at all, it's important for us to know that we live in a country of extraordinary assets, land, property, natural resources, yet so much of the wealth remains untapped, underutilized, or simply undervalued. Now, today's conversation will be asking some bold questions. What evaluation is the key that unlocks Nigeria's prosperity? That's a bold question that we're going to be asking. And honestly, we have somebody who is well prepared, somebody who is I don't know how to describe, but again, shortly when we get to introduce him, you get to know a lot more about him. But I can assure you, it's going to help us to explore and to begin to look at unlocking Nigerians' wealth, how valuation builds our prosperity. So without further ado, I'm going to allow that the video be played in 1 minute to introduce our guest, and I come back and I'm going to get him up here so that he can start the presentation and we'll delve into it right away. So the video to presentation of our guest speaker, please, can we have it up then before he comes up?
In a market driven by data, investment confidence, and economic realities, few professionals have spent as much time studying the evolution of Nigeria's real estate sector as Mr. Ao Ibaru. Meet Mr. Ao Ibaru. Mr. Ao Ibaru is a real estate investment strategist, market researcher, and prop tech executive with extensive experience across valuation, institutional investment, infrastructure, market intelligence, and African real estate advisory. He currently serves as Chief Investment Officer at Pantera Real Estate Group, an investment and technology business focused on transforming the African real estate market through research, capital strategy, and innovation. Over the years, Mr. Ao has become widely recognized for his deep analysis of Nigeria's property market, publishing market outlooks and sector reviews covering housing, land, infrastructure, retail, office, hospitality, industrial assets, private equity, venture capital, and property technology across Africa. His work has helped investors, developers, and institutions better understand market cycles, policy impact, capital flows, and emerging opportunities within the built environment. Before Pantera, Mr. Ao led research and advisory functions at North Court, where he advised clients on investment decisions, valuation strategy, and market positioning. His earlier career also spans the banking sector, including roles at Diamond Bank and Stanbic IBTC, where he worked across investor services, enterprise cost management, operational efficiency, and institutional investment frameworks. Mr. AO holds a degree in estate management, an MBA from the University of Lagos, and is a member of the Royal Institution of Chartered Surveyors, MRICS. He is also associated with the Society of Property Researchers and has contributed to conversations around AI, infrastructure, policy reform, and technological transformation within African real estate markets. Join us as he speaks on Unlocking Nigeria's Wealth, How Valuation Builds Our Prosperity. Discover how valuation drives investment confidence, unlocks capital, strengthens asset performance, and shapes sustainable economic growth. Ladies and gentlemen, please join me in welcoming Mr. AO Ibaru to Real Estate Today.
Okay, so Mr. Ayo Ibaru, you are welcome. Good to have you. We are honored to have you. So the floor is yours, sir.
All right. Thank you very much to everyone who has joined us from wherever you are. And to Bossiele & Co., 35 years and counting is not a joke in Nigeria. So I've just sent a request to the back end to enable my sharing of screen so that I can put up a bit of what I have prepared for today's session. Now, what I will try to do is not go too deeply into the technicalities around how will I put this now, what to do and when. You have valuation challenges, but I will speak more to the broader issues. A number of things I will say might be a bit challenging, but I feel that's the best way to go. And should you have any questions or comments, you can just let me know. Okay, so let me see how I can do this. Just a minute, please. Okay, so I'll need you to let me know if you can see my screen. Let me know if you can see my screen at any point in time. You should see a black and white.
Oh yeah, it's up now. Your screen is up now.
Oh, beautiful. Okay, so Unlocking Nigeria's Wealth, How Valuation Builds Our Prosperity. My name is Ayo Ibaru, as the intro rightly stated, and we've done quite a bit of work as our previous firm, North Court, but then at the turn of the year, we did do some form of reorganization to enable us bring in a bit more investment into the country and by extension the continent. And again, that will speak to today's session. I will speak on Nigeria, but then I will take a few examples from a few African countries. We like to start with a quote, and here we're using to understand is to know what to do. If you've related with quite a number of surveyors in Nigeria, you realize that knowledge and understanding isn't really a problem. But what we're trying to do now is get to a point where we can harness all of this and bring out solutions at a much higher level. So we will go through the economy, because you cannot discuss valuations of properties and assets in the real estate market without discussing the economy as a whole, because quite a number of things impact the overall performance and outcomes as far as valuations are concerned. And then from there, we will go a bit into the real estate market, and then we get into, in my view, the matter proper. I have a couple of slides that have information that we will dwell on a bit, and then we will try to round up with how valuations, not just their accuracy, but their credibility on a global scale, will help lead to prosperity, which is by virtue of income, revenues, jobs, and then capital for long-term investment. And I think it's important that we emphasize that Nigeria is now at the forefront of the general turn of investments from the global north to the global south. And you don't need to look further than the Dangote refinery right now. In-house estimates are putting it at about $50 billion, but I don't know, it might end maybe slightly lower than that. 10% will be listed, and everyone from the US government, Bombardier to NMPC, is investing. And that's to say, the general demand for valuation services, accuracy, and so on and so forth will increase. And what that means by extension is we have to really understand not just the technicalities, but how we can extract that value. Because I am not of the opinion that having accurate valuations alone will take us to prosperity. We will have to arrange our work around what the global demands and what the local institutions actually need. So Nigeria's economy has continued to see, maybe for the first time in quite a while, a moderation and stabilization of the exchange rate against the global reserve currency, which is the US dollar. We're now hovering around 1,370 naira thereabout to the dollar. In some places, 1,380, 1,375, but it is clearly not the 1,516 or 19 we had to endure last year. GDP is growing, and yes, there's the argument around we are seeing positive print numbers, but on the ground, the figures don't justify. Well, I think a good way to see that is when local investors and foreign investors are making their plays, they look at what the government actually says. Okay, and if the government says this is where the economy is going, generally they will take that and then they will make their regularizations based on what the government has said. So if the government says, and we will see it later, that the housing deficit has magically reduced from 28 million to 14, 15 million. I personally don't agree with it, but that's what you will see local and foreign investors work with. And the reason I keep emphasizing local and foreign investors is I think the formula is now complete. If we don't have enough local investors in Nigeria placing demand for assets and consequently valuations, we can just hold on for foreign investors. So the play is local first, then foreign. Okay, local first, then foreign.
Hello, Mr. Ayo. Seems to lost you for a bit.
Okay, can you hear me now?
Yes, you're good. Yes, we can hear you now.
All right, glad to be back. Please excuse the drop. Okay, so again, what is driving demand for property and again, by extension, valuation services? We still have urbanization. We still see growth in, now it's Lagos and Abuja. Port Harcourt is making a strong enough case, but the political environment there is slowing quite a number of things down. We expect that to be resolved by the end of the next election cycle. We still have major infrastructure investments, and as I try to present at the Real Estate Outlook for Nigeria, I think back in February, or was it end of January, where infrastructure goes, you have an idea of where investments can be expected. So whether it's the Lagos Coastal Road, the Abuja-Kano Expressway, again, the Lekki-Epe Expressway, all the way to Dangote Refinery and beyond, you start to see property values and as such comparables go up around those areas. So what that means is we can expect increased inflows, increased revenues. And again, that's my long way of saying, once you have infrastructure investments, you can expect property values to go up, and that will influence how valuations are conducted. It's always good to have an awareness, or as I like to put it, economic and situational awareness of what's going on. There's still the Strait of Hormuz and how that's affecting how Nigeria's economy is performing. The FBN is targeting 750 billion recap, which is a bit small, but it's a good start. I think The big news here would be the shareholders at UPDC greenlighting a 100 billion fund, and they want to use this to invest in mid-market housing, and they have a very strong team. So what that means is we can expect to see a bit more supply if they are able to execute as they have done in the past. Of course, the Lagos State Blue Book that has redefined quite a bit in terms of values will be taking effect or has taken effect 1st of May. The problem I hear a number of clients, and that's on the investment and the finance side, say around our valuations still remain the consistency. So what many have opted to do is stick with a couple of service providers, say surveyors and valuers, and just run all their valuations through them. And I'm sure we know the big names, right, for all the major projects. And that really isn't a good sign, even though it's a fair enough start. What you need is a framework that everyone operates by. And even if the eventual values are going to be different, they shouldn't be too far apart. The four pillars that help point the direction as to where the Nigerian economy is going. External reserves took a slight dip in Q1 2026. Inflation again is recorded as declining, but again, the market sentiment is somewhat different from that. Exchange rates are actually stabilized. So we find the activities of the Ministry of Finance and the Central Bank and the coordinating Minister for the Economy yielding quite a bit of fruit, even though, yes, it just came in. The tax reform has also helped to stabilize the overall environment. And this is why I'm saying all of this, except we are able to show that the environment in which our valuations are done is stable, it will be difficult to use them as a bridge, a credible bridge from where we are to the prosperity that we seek. That's why I'm going through all of this. Price of crude is at 127 averaging for April. And this is where some form of governance over the years past would have really helped, because this would have been a good windfall for Nigeria to help invest even more significantly in infrastructure, which helps again increase property values. But as it stands now, our framework and our governance around crude oil receipts isn't as strong as it needs to be. And so we can clap at the numbers, but we will still have to come back in a couple of months to see what we did with the additional funding beyond sharing it to state governors. Real estate markets, again, I know I'm talking to a house full of property people, so I will try to move really quickly on this, again, knowing that we have to take questions maybe inside of 45 minutes. The market cap for Nigeria estimated property, again, is 21 trillion. There are arguments for and against, but it's the number that we can work with. I still put 28 million housing unit deficits. The most credible data sets and analysis and expert opinion, Delphi technique, and the various things that we've used in-house, including our proprietary data, still point towards north of 28 million. So it's actually higher than 28 million, but this is the figure we can all agree on, 14, 15 million from the federal government of Nigeria, while well-intended is we are still waiting on some form of methodology as to how that number was arrived at. So the average resi rental yield, Lagos Prime, is still 6 to 8%. Why Lagos? Because it's the center of Nigeria's real estate market. And 6 to 8% is just going on average. When you start to switch towards short let, you move towards hospitality, you take it up towards warehousing, industrial, healthcare, you start to find yields north of 10, 11%. Urbanization continues to be the main driver for, one of the main drivers for property value growth, because it fires up demand, and this will be in low to mid market areas. I typically don't like discussing high-end and luxury markets because it's a bubble already. We already know what's going to happen. We already know who's going to buy, and we aren't building in sufficient volumes to destabilize that market. So most times I just look at what's happening in the low to mid markets, the FX and inflation pressures, and then the institutional capital entry. Now, the expectations for investment at an institutional level in Nigeria are still very high because we still think the pension funds and the REITs are not batting at their peak, as the Gen Zs will say, or they're not batting at their true potential. Maybe more so for the pension funds than the REITs, because the REITs have come out with their results and their plans for expansion and asset acquisition and so on and so forth. So there again, we know there will be demand for valuation services, and that will help trigger the next round of investments. But pension funds are still pretty much largely invested in government treasuries, and now be bonds largely because, again, returns are predictable and they don't have to go through the hassle of actually understanding how a market works. But again, it's their decision, and that's what they decided to go with. The informal markets continue to expand at a much faster rate than the formal markets, and that's one loophole that we will have to solve for as a collective. And that's because where the demand is where the services have to go. So if we are unable to, in a way, capture that demand and bring it formally into the overall real estate market, the total number of assets being valued is actually lower than what it should be. And I guess that was part of what Tenando de Soto was trying to get at in 2000 when he published his book on how we need to ensure that titles and properties are matched efficiently so that we have a formal environment where they can now be collateralized and they can be used to get loans and run on mortgages and expand and so on and so forth. Again, this is me trying to show how expanding the quantum or the quality or the volume of assets in a market helps, let's say, power again the engine around our valuation services provision, and that leverages the inputs to get a higher output, and then of course from there you can get higher funding injections, because that's where really all of this is leading to. Evaluations are done properly. We're able to get financials, injections into the system, and then we can cycle that into more and more assets. And if you go to the leading cities in the West and quite a few in the East, it's more in the West dominated by financial engineering and loans and mortgages. Even recently, they wanted to move their loans up to about 30%, 30 to 40 years, right, from the current 20 thereabout. But then in the East, you find that the governments do quite a bit of investing in assets themselves, and we are trying to straddle both. So 283,000 jobs is what you currently have provided by the real estate market in Nigeria, and that's spread across valuers, brokers, facility managers, and so on and so forth. And I did look at a study by Guo and Chen, that was 2018, where they looked at how real estate markets and urbanization, as they move up, they lead to population density and the demand for infrastructure. And that brings in private enterprise who will need valuation services. And then you can now expect increased private investment. Now, the problem is if the framework, okay, there seems to be quite a number of charts. Can do something? Okay. I think what will happen is...
No, we'll come back to that, sir, after your presentation, sir.
Okay. I'm on so many of these things. Once I see it, I just quickly go there. Okay. Thank you very much for that support there. So what you find is between private enterprise and a strong legal environment, you have increased demand for valuation services because now they are in law and they are enforced, and then you have increased private investment, because if you can't have consistent valuations in value output, regardless of the valuer, and in time, in terms of the timeliness in which they are delivered, private investment will be a problem. And I understand why people say this is how Nigeria does things. So it lends more credence to one of my core arguments today, which is that the local investors have to make sure that this works before we can think of foreign investment. So that's really where all of this is skewing to. Now, I just thought to put this here just so that we know real estate markets and construction contribute quite a bit to the overall economic performance. And that's, I think it's China I was studying a couple of weeks ago, where the current contribution of real estate / construction to the overall economic size is about 30%. Right. And that's because of the need to house and to provide housing and infrastructure and related services for circa 1.2, 1.3 billion people. And it just helps power the entire financial system. Now, of course, if it's not managed properly, we have what we had with Evergrande, but by and large, we can see, at least as of the last reports coming out from the National Bureau of Statistics, we can see real estate markets now in Nigeria beginning to contribute even more to the overall performance of the Nigeria economy. And that's really how it should be. Now, what the good news here is that we are still batting well below our capacity. So if we're able to get all these things right by way of legalizing and enforcing and ensuring that its best practices being used, then we can see even more and more demand for valuation services, and as a result, the overall growth and prosperity by way of jobs and income and revenues, and of course, tax at the national level. This chart, I think, is possibly one of the top 5 most important slides in this. I think we're going to about slide 30 thereabouts. So Liza and Grow, 2 researchers in 2011, came up with the Real Estate Investment and Attractiveness Index. It's pretty much 6 things that they looked at as the reason why certain countries had more investments in their real estate markets than others, and they assessed 66 countries all over the world. No continent was left out. So you have investor protection. How are investors protected? You look at the capital market. How strong is the capital market? I can tell you for a fact that Nigeria's capital market right now is second on the continent, only to South Africa, right? Our investor protection still needs quite a bit of work. That's why you can see it in black at the background towards the bottom of the chart. Administrative burdens and regulatory limitations are a consistent worry. Anyone who has finished a major project in Nigeria, or even a minor project, can attest to how many administrative burdens and loops you have to go through, regardless of whether you have relationships into place or not. In fact, the bigger the project, the longer it takes, and the more you will have to have the same meetings. I don't want to belabor the issue, but this just makes things a bit difficult, to put it in short words. Investment opportunities in Nigeria are still very high. No one's going to doubt that. And our economic activity is one reason why investing in real estate markets in Nigeria and pushing the agenda for increased valuation services will always be a good idea. Nigeria's economy, in my view, is actually larger than the current IMF 285 billion figure, right? The IMF has been known to get things wrong once or twice in a while. So the activity, whether it's trade, whether it's telecoms, whether it's even ICT, agriculture, these things have a way, if they are managed properly, of driving the demand for real estate assets. So it's a question of who is able to tie all of this together. And so far, if you look at the largest projects in Nigeria to date, or ongoing, really, from infrastructure perspective, is the Lagos Coastal Road, which is purely government driven, and the Dangote Refinery, which is an 8-year project by a man and his team. So when you look at both projects, you have an idea of what it takes to get things done, and then to track valuation. So that has been something of a background, because the idea is, if we are going to go into valuations and what it can do, we don't want to move in with the wrong assumptions, and we don't want to move in with ideas that are correct but not up to date. So that's why I went through all of that, so we know how the world has changed, what actually works, and then we are all on the same page. So we all know what valuations are. By definition, it's an opinion of value as of a certain date, certain time, defined interest. based on market evidence expressed in monetary terms and so on and so forth. We know what valuations are. But I think if you are on this call, defining what a valuation is isn't really the concern. It's really more around what can we do with what we have to get to where we want to be. Either it's a question of doing bigger and better valuations, getting it more accurately, or ensuring that assets are created so that we're in a position to expand the market so that there is a need for valuation services. And what makes Nigeria a good place? We have various asset classes. What the hospitality submarket is doing is rather impressive. Everything from big name brands like Marriott in Ikeja, Lagos, Transcorp Hilton, and the Transcorp Center in Abuja, to even the short-let services, which have been expanding, and quite a number of people say the market is dead. Well, our research had shown a bit of that earlier, but we feel there is a turn within that sub-market that not many people have seen, but maybe that's for another session. Again, urbanization continues to be the main thing, and I've heard people say that when you're thinking about Nigeria's 230 million people, you don't have 230 million customers. You have maybe only 5 or 10 million customers. And I think for the overall assessment of an economy, it's a good idea to have. But I think for some industries, it's just flat out careless, because there are areas where you have to think about all 230 million people, and one of them is housing. Okay, so that's an opportunity for ensuring that projects are executed in such a way that they can be collateralized for increased financing to do bigger projects, because that's really one of the main ways projects are done in quite a number of advanced jurisdictions, meaning you finish a project, you get valuations done, you get mortgages in, you throw it back into the system, you use that as collateral, you get more funding, you get the same team back who did the first project, but this time you do more. Okay, and that's one place where valuations come in. Now, when you see how valuations are done, you find out that it is more of a financial tool. It's more of a financial, let's just call it leverage, that allows the increased liquidity of a system. And if it's done properly, it is now converted into more and more assets. So I think one other theory I am trying to prosecute here is that valuations can be one way.
Hello, Mr. Ayo. We lost you for a minute.
I'm back. I'm back.
Okay, good. All right then.
The good people of MTN, very good organization. That's what I said on recorded, on our recorded podcast. Great guys. Okay. Valuation again is important because as you get into larger transactions, they are a non-negotiable for the financial community. And the financial community also exists in the central government, and they just call themselves by a different name, which is tax and regeneration, right? And service generation, revenue generation. So the new tax law came into being in January of 2026. It does have quite a number of provisos, but it does put the central government in a place to, in a sense, raise more revenue, which we expect will be channeled into, again, infrastructure and housing and real investments. And so it is one opportunity to get out of the over-reliance on oil. Again, it does mean that compulsory acquisition, Land Use Act, planning, and all of that, which will be necessary for the development of further infrastructure and new projects and new towns and so on and so forth will be made possible because now we are able to have more accurate valuations. And I've heard the counterpoint, which is even when you have accurate valuations, it is not always expected that the government will pay at that level, or they will find a way around it. And on one hand, while I have seen and in part experienced that, I always like to emphasize that in the end, all of this is not just for the local environment, but for the foreign environment. And we've heard quite a number of industrialists say they would rather invest in foreign countries than in Nigeria, even though we've had people who will do the reverse. And it is in this back and forth that we find that valuations have to get even more rigorous, has to get more robust, and there has to almost be an ironclad partnership with the financial community that, look, even when you get a valuation that from your own internal system doesn't seem to be fair, you can challenge it. Now, it may be controversial, but ultimately, if we are going towards prosperity, everyone has to bring their best foot forward, because that's how this works. If one party keeps trying to take advantage of the other one, I think things will just continue the way they are, and it's up to us if that's what we want. Again, nothing new here. Sales comparison, income capitalization, and cost approach are three approaches or three ways to look at the valuation situation. Again, I put the valuation definition there again. Not that we didn't get it the first time, but it just gives again another opening for this. Now, things get a bit tight here because we start to delve into the questions around utility, because valuations are generally important when the property is useful, and to extend the definition to a wide range of persons. We have to understand that land is scarce, and then we bring in the highest and best use that the asset can be put to, in this case, bare land. And that's where the arguments to and fro start to come. So if you say you have a bare asset, bare land for potential development, and as I went through a recent situation, you have 4 different viable projects, we even have to go forward to do some form of a potential valuation as to what value add, aside from just revenues, this asset will bring. And you do that for asset 1, asset 2, asset 3, asset 4. And so this again is another place to which valuations could be put. And it may, what I know is for foreign projects that are happening in the country, that's the standard requirement. For quite a few of them. But aside that, it is something that, we could even do more of. Effective demand is important, especially in a country like Nigeria, where demand is highly affected by pocket size, by private investment. I read all kinds of studies, and I'm sure you have too. I did come across one recently that said the average family in Nigeria has only 50,000 naira a month as allowable expense for entertainment. So if you're building anything around hospitality, you should know that your target market, your effective demand basket is going to be smaller than if you were doing something else. Again, you can also leave that group, and then you start targeting the 0.0001% of Nigerians who can afford pretty much anything. I think a big problem here that we also need to look at, and there is some progress, but again, feedback I'm having from the investment community is that it's not as sincere as they would have expected, which is the transferability of titling. Because even when the assets have been valued, even when the assets are live, and the value, even going into the future, is 60-70% confirmed, the whole thing around title transfer sometimes takes a bit longer than expected. And, you have the former Minister for Housing and Urban Development saying things around over 97% of assets in Nigeria don't have titles. That's considering the amounts of in terms of transactions, capital, resources that go between buyer and seller, it's not something that should even be said if you ask me. But then again, I think he was just trying to be honest. Going into the various calculations, yes, if we're going with sales comparison, we use market evidence comparables, and we all know what the challenges are there, which is data paucity and a general unwillingness to share data at the level that we should, so that we are able to have a more transparent market. I think as far as valuations are concerned and closed transaction values are concerned, at least for much of Nigeria, I think we're a bit more concerned about closing the transactions ourselves than sharing data. And I understand why people do it, but the question is, where does that leave the entire operating environment? So if you're on this call, if you're on a team, if you're in a meeting where these kind of things are discussed back at your boardroom, where you're from, you might want to reconsider the approach to that. I mean, before we were Pantera, we were Northcote, and everyone knows 3-4 reports with free data. It's even still online now. We've been doing since 2013, right? And we still release the reports when 1.5 months ago. We have one coming out this week or next at the latest. And that's because we have always believed the more data in an environment, the more transparency, the more clarity investors have, local and international, the more we're able to arrive at more accurate values. And again, we're on our way. We're not just there yet as an investing community and even as asset surveyors and valuers, in my view. Income potential and replacement costs are all methods that we are aware of, and we all know what the contexts are, whether it's the linking with the overall economic fundamentals that I had discussed earlier, or the context around how, if you are importing 80% of what you're going to use and you're paying in dollars and you're building high-end assets, whether it's residential or office, then the US dollar becomes a central point in your negotiation meetings. And so when you are thinking around replacement costs, I'm not sure where you want to calculate not just in Naira, but then you want to have what the view looks like from the dollar table. Okay, as we begin to round this up, we are looking at the factors influencing property valuations. Again, you have your usual suspects, the locations, but then more and more, the locations are now being redefined. So you're looking at proximity to roads, quality of roads, population density. You're looking at flooding, flood risk, genealogy of land titling. You're looking at closeness to art centers. For example, as we are aware, the people or the team behind the Palms, which was one of the first malls, in fact, the first mall of its kind, to charge per square meters in dollars, and or even to be developed. The team behind that has started work on the arena, and the arena is a circa 12,000 square meter entertainment center. They have their funding lined up. That asset alone will impact how valuations are done and the overall values of whether it's land per square meter or whether it's the buildings or various assets around that area. And that's what happens when finance and capital and infrastructure come into an environment. It's just easier. And I mean, we've done some work with them on, data and transparency and analysis. And that has also helped to increase the overall. I mean, what I'm trying to say here is valuations are a key path to prosperity if everybody works together. That's really what I'm trying to say. If there's some form of collaboration in the system, because if there isn't, we are either going to overprice, or we are going to undervalue, or we are going to shoot in the dark, or we'll just make sure push out one more report that maybe might make us not as good as we should have looked. Right. The other thing you need to look at, of course, is the physical, or from a physical standpoint, physical characteristics, and you're looking at amenities. So power and water utilities, all of that is increasingly, again, depending on the valuer you're working with, factored into valuations, floor to ceiling ratio, and so on and so forth. We've looked at the economic fundamentals at the beginning of this presentation, and then we recently looked at legal. I mean, the Land Use Act is still there. I suppose one day we will find a way around it, but until then, we are stuck with C of O and deed conversations. Of course, zoning is a bit more flexible in the cities than it used to be, and that's the progress, which we have to point out here. Okay, but the conversations around transference of title is still not where it needs to be. Just thought to touch on the Africa real estate market. There's quite a bit ongoing, and I think for us in Nigeria, it's a question of what can we learn or what can we pick. So you still find 65% thereabouts of sub-Saharan African land is still informal. So sub-Saharan Africa, of course, we all know is from slightly above Nigeria down, and it's a lot of informal land activity. In fact, I think in our half-year report last year, there was about a 2 or 3 page analysis on just how much, and you can go to our website, you can just download it for free, just how much in terms of transactions and exchange of ownership, let me put it that way, is ongoing in the informal land markets. In fact, one of the conclusions of the researchers was, and I had to read this thing 3-4 times, I had to download the paper from about 2 other sources, because the researchers concluded that most investors, or many investors, prefer the process of buying informal land. Going through the informal process just seemed faster. There was a bit more credibility, and I had to look at it, because informal land assets are not at their peak market value. Therefore, they can't attract the right kind of financing that will build the right kinds of projects, generally speaking, right? But then, the entire formal framework works, but it just seems a bit stiff. So the valuation question, yes, is around determination of asset values, as we have seen, a specific place, time, use, purpose, and so on and so forth. But there's really a lot to speak to around the frameworks and around the overall environment in which these valuations are done. So we have Ghana here as a case study, and they've been aggressive, and I think they got the memo rather early. What I want to know is what they will do next in terms of forcing transparency into their system, whether it's going through their GIS, going through their GICC, going through their associations around their property professionals. They've always emphasized, they've always sponsored and collaborated with the various institutions on trainings and transparency, and unifying the various cost parameters and ensuring that they are done. Now, some argue that Ghana is a much smaller country, so that can be forced, and I won't take that from them. But then we need to find our own way to ensure that we're able to reduce the number of non-performing loans, because by the time you tie the wrong valuation and then you tie it into a mortgage or you tie it into a collateralized asset, you have problems with loans performing. And actual valuers and experts, like Mr. Obosi, would sit back and he would just look at it, he will know that these guys didn't get these numbers right, because I've spoken with him and he's very, very clear-headed on these matters. So that's one thing Ghana has been able to do, unify and enforce the overall approach of property market professionals. And once people are found erring, there's a process by which that is done. Of course, they are not perfect. No African country is, but the work they are doing is rather clear. South Africa even went maybe a step further to, okay, I'm not sure it's this slide, but they were able to get mass valuation frameworks, leveraging prop tech and various data sources to give some form of a back of the envelope or back of the napkin argument for what the value of an asset is. And then from there, you can now bring in the formal valuers, the registered valuers, if that's what you insist on, even though this is still acceptable, so that at the end of the day, they're able to arrive at market values that investors or that potential buyers can work with, because that's really what the issue is. And each economy is different, each market works differently, but ultimately, everyone has to have a consistently repeatable model for arriving at uniform value. So if they're going to be different, it shouldn't be by much. So this is just a screenshot or a snapshot comparison between Nigeria or learnings Nigeria can get, and then SA and Ghana. So it was Lightstone automated valuation model that gets in about 80 to 100 variables to arrive at the overall final asset value of the subject assets. And, different ideas have been thrown into the basket. Some have made it, some have not. Ghana has continued to experiment with different price indexes, and it's amazing how Nigeria is still working on bits and pieces of a price index. I have seen a number of organizations, and I believe the naives also came out with one or two, but these things need to be updated. They need to be frequently reviewed, and they need to be pushed out into the market, maybe a bit more. And that's what you find in a place like SA. So we can also learn from that. What does all this do? It creates the right environment for the power of a valuation report to unlock more financing, to unlock more capital, and to unlock actual returns for all stakeholders involved, because that's also what we have to think about. The investment community is concerned about a number of things, and one of them is the credibility of independent valuations, because it does send the right signal. They do discuss these things, and I'm sure those of us on the call here are fully aware of this. It does strengthen the framework around the REITs environment. Again, like I said, UPDC has gotten a go-ahead 100 billion, which is a lot, right? Even in Naira terms. To invest in mid-market and maybe a bit of upper market housing. But they are going to need heavy-duty valuation services, not just of what they currently have, but of what they want to go into. And that will help them not just make the most of the funding when it is raised, but also put them in a position where they can get co-investors, because that's also what you want to use a valuation report for. Okay, valuation for development. This is just a brief primer. Residential valuation method, heavily simplified. There's no need to even say that here. And you look at land acquisition. Now, the general consensus is that Nigerians overpay for land, and I think the researchers who came out with that conclusion, we're looking at not just the formal payments, but also the additional payments, and then the informal payments. Let me use that again, because of the demand for assets in Lagos Island, due to, people say it's cross-development valuation, value inflation assumptions, but then again, it's only inflationary if you cannot defend it. But the demand is high, right? We did have a short debate late last week, a few of us analysts, as to what the vacancy rates in Ikoyi actually is, and it's actually a very low percentage figure. It's clearly less than 5%. Let's even start with that, because there's just so much demand, and there's only one Ikoyi, there's only one Banana Island, there's only one what's that place, Parkview, and the heft, political will, economic circumstances, financial wherewithal to create any of those places now. We'll have to wait until Eco Atlantic City runs out of steam, which could even take decades, right? So that's really the high-end location now, and that's where all the high-end investing, especially in USD, is going, except, of course, you're a bit more adventurous, and so you're doing valuation reports around the Alaro City area and, that side of town. Valuation for taxation is still an important tool as far as the government is concerned. They still recently released a list. I mean, I'm not sure they've published it, but I'm aware of a list at the back end, valuers who are going to be doing certain projects for them. They've updated one or two other lists because, again, property taxes right now in Nigeria is just 0.1% of GDP, around that. And by many government valuer programs or frameworks, that's not a very good report card. I mean, yes, I would say we are comparing with the UK 3.1%, but it doesn't even have to get to 3.1%. We can even start with, 1.5, 2%, right? Because that's of $285 billion dollars. If that's what we're using as our GDP. That does again bring in quite a bit of funding for the central government, and it does help balance the books. And yes, there are issues around the current administration's appetite for loans, but we have heard it before. It is better to borrow and use it rightly and grow the economy than to not borrow at all and then spend 3-4 decades trying to get the same outcomes. So, and that's why valuations are really important, because they do put the government in a place to get the actual value of assets, tax that, and then use taxes as it should be used. This is just around why valuations are important in the legal sense of things, and it's really around disputes, insurance, and then compensation and mortgage collateralization. The expert witness situation is one that not many valuers pray to be in, because this is where everyone understands just how serious the job is. Because you find, when you're going on trainings like this, or you're talking to live sessions and you're speaking to people, you understand that, okay, let's just get the land value per square meter. Let's just do this. Let's just do that. But if you've ever been to a court sitting where there's a serious case and there's a valuer, an experienced valuer defending a valuation figure, then it all comes home very quickly. And then you start getting asked all kinds of questions, why did you use this figure? Why not that figure? And then they bring out other reports and say, this person used that figure. And then they say, 5 years ago, this person used that for the same area. Why didn't you use this? And then you want to hide under the currency. They tell you, no, the oil prices had moved. And before you know it, you are the central bank governor at the same time. You are the head of tax at the same time. You are the surveyor general at the same time. It's because, you see, when you go legal on a matter, it's possibly the highest level, and it shows the state of your market. And that's what local and foreign investors are looking at. How your valuations stand up to scrutiny at the highest levels. And that's why it's important that we continue the work in getting our valuations right, understanding that not just because we may be called in as an expert witness, but also because it's just the right way to create prosperity for everyone when we do things correctly. So this is one slide that I think will or should join the list of critical slides as we round this up. From accurate valuations to national prosperity. So that's point one. As you can see on the screen, accurate valuations, they produce a number of things. In my own mind, they produce credibility, they increase transparency, but maybe a bit more physically, they produce bankable assets. If the valuation is right, we're able to expand the aggregate asset pool in the country. Once an environment has a large asset pool, rigorously underpinned by strong valuations, which of course take into consideration the overall functioning of the economy, you start to have investment inflows. Not just inflows from foreign investors, as I have tried to emphasize since this started. Inflows within investment. And to give some kind of a context, I did read a report, I think it was in January, where some researchers came out and concluded that the amount of solar power generated by Nigerians is enough to power the entire country. I'll say that again. And hopefully, if I can find the paper, I can send it to Mr. Fowler, and he can circulate. The amount of solar power generated in Nigeria is enough, or alternative power. So that was solar and that was diesel generator and so on and so forth. Is enough to power the entire country because there's enough internal financial heft to grow the economy to a certain standpoint. Whether it's bank loans, whether it's just share management and using bootstrapping resources, and then again partnering, collaborating with maybe larger players or smaller players. So that's 3 investment inflows, and then you start to have development activity. And then that's where you start to see the construction, the infrastructure, you start to see services coming out of that. You start having, at the end of that, you start having property management, facility management. You have brokers moving around the whole place. You have valuers come to just check that everything's as they had projected. And then you have tax revenue growth, which is one reason why many governments with strong property markets encourage the early stages, because they know taxation will come in at the end. And then you have national prosperity. Again, this is a framework, and you need different points to all work. We can't expect one valuation report to solve all the problems. It's a number of things that all work together. These are a few trends, everything from the way we view land physically, to the way we generate reports, to the way we analyze data. And this was something that I worked on in 2022, where we're able to estimate or use the data, movement data. That is, if you left your house and went to a shop, then you came back home, then you went to an office, then you came back home, then you went to the airport. We were able to get that data from Google, of course, and track property values alongside. It's a long process, but it's part of where the technology has gotten to. And this was in 2022, just using mobile data and geolocation. Anyway, these are challenges and opportunities. I've said quite a number of them, but I think we need to round this up. This is my last slide, where again, I will try to recap what we started with, how foundational valuations are, and how we still need to find a way forward around data, because if we are able to solve that, we can unlock the capacity of valuations to increase general prosperity. So I think I'll leave it at that. Thank you very much. I will take down my slides now, and we can take any questions you might have.
Thank you so very much, Mr. Ayo. That's I have my notes just full. Yeah, thank you so very much. And I'm so sure that for everyone who's on this call would actually, especially the practitioners who are here, will understand that a lot has gone into this, and this is really, really, really important for us at this point. I have I can see there are some questions. We're going to take a few questions, but before then, I have 1 or 2 talking points I want to engage you with. Just a few of them, and take some questions again. If you want to ask Mr. Ibaru a question directly, we'll give you that privilege. You just show your hand. Okay, I can see 1 or 2 hands raised already. At the appropriate time, we'll bring you up to the panelist so that you can ask him those questions directly, because Mr. Ayo actually had said a whole lot that actually would require us to go back. And I want to encourage those who are on this call to go back to listen to this. You can go back to listen so that you can get the essentials, the meat of the matter from what Mr. Ibaru had actually mentioned. Thank you once again for that presentation. Very, 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 very strong and a very good one. Now, going to the talking points, just few of them from my own end. And there's something you did mention. You talked about the demand for valuation accuracy is actually increasing or will continue to increase. I mean, the general demand for valuation accuracy. Now, I want to ask, and I think you mentioned a bit of them again, but because on this call, we have quite a whole lot of people who are in the industry, and you also said something very instructive, the need for us to begin to do things right, regardless of where we find ourselves as valuers. Then you also talked about collaboration, which is very strong for me too. Now, you did mention that there's a strong demand for valuation accuracy. So I want to ask, now, from where you sit, and I know you handle a lot of data, now, what are the biggest gap in how property is currently being valued in Nigeria? I mean, from where you sit, right? Again, I ask this because a lot of people on this call, it's important we solve and we handle this situation. What are the biggest gap in how property is currently being valued in Nigeria? And what are the real consequences of getting it wrong? Now, you mentioned the indices, which are very good, the FS, the inflation, which are some of the things that, of course, when you're doing valuation, we use them here and there. But again, where you sit, what are the biggest gaps?
Okay, so there are a number of gaps, but let me start with the ones that come to mind. From the valuations that I see, we value as if my outcome or my output will not affect how my other company's brand is perceived. So let's say I'm Ion now and I'm doing a valuation. We value because we just want to close the transaction. We want to save time. We're in a hurry. Even the clients now, they know that we need to move really quickly. Just give anybody, they will do it. I might not be able to say no. And then I just put out a figure, not knowing that the output will affect how Ubosiele is perceived. We don't really see that. That's one. I think the second thing is, if a foreign investor is going to come into Nigeria to do a project, I'm finding that increasingly they don't come with their face anymore. They used to on and off, but now they come in through other local valuers. Now, if they come in through other local valuers and we don't do the work well, they are going to see it. But I think the third point is the most important point. I have seen one or two, I won't say if they are local or foreign investors, give out the same valuation to 4 or 5 valuers, pay all of them, just to see if they will arrive at the same number. Now, they know you won't arrive at the same number, but what they want to do is see how far the numbers will differ. And I think I will add this as a bonus. If we say this is our value, it should be our value. Let me leave it at that. Most of my biggest disagreements with clients have been to shift the value, and we said we weren't going to do it. And I thought, once we've done it once or twice, they would stop trying to ask us to change it. But, it hasn't stopped. So the fight just continues, and, you just get your payment much later after phone call. But they will try to, and that's what I mean by it's a big gap, but it's still there. So I guess it's more of what are the old gaps, because they're not really new gaps. It's just the old gaps that have refused to go away. People trying to just get their figure with your stamp on it.
Okay, thank you. So I think now I've seen quite a whole lot of hands raised up. I must please from the back end, can you bring those 2 people up so that they can ask their question directly? But before you bring them up, I'm talking Angela. Please, can you help me get those 2 people to the panelists so they can ask the question directly? Now, whilst we're trying to do that, I can see that there are other questions, but let me also come to this again. Foreign investors, you did mention it. So because of your dealings also with, foreign investors, and also glad to know not caught now, Pantera and all of those things and all that. From an investor's perspective now, so I would ask, how does the uncertainty in valuation right, affect this domestic capital coming into Nigerian real estate? I mean, real estate now.
So I think they are used to uncertainty, and increasingly, more of them come to Nigeria because they know with the uncertainty will come the outsized returns. Everyone knows that at this point. They know the uncertainty is just the entry price payment for the outsized returns. So what they are doing now is they are increasingly trusting local advisors and local experts. They want to see what you are going to do first. They want to see how you are going to navigate it. And then when you've navigated it, they will now try to find a way to get that information from you, or they'll be very close behind you once you've navigated it. And I'll give you a lease renewal I just completed. Again, foreign investor. And the whole process was maybe a year, 4 months into the renewal of the lease. And the entire lease itself is 10 years renewable every 5. And we started the process a year, 4 months. I think for the first 11 months, they were watching our moves. They were just joining us on the calls, seeing how we do things, and so on and so forth. It was in the last maybe 1.5 months that they got really aggressive. They were now confident enough to take. So they know that there are returns in the market. They know that the returns are outsized. Where are you going to get 8%, 9%? Where? Where are you going to get it in the US, in the UK? You would really have to sweat it out. But here they can, it's just navigating everything. And, the last 1 month, 1.5 months, they now have mastered how things work. And so they are now having more conversations. They are initiating more meetings and so on and so forth. So that's what I've seen.
Thank you, Mr. So let's take so quickly, I have Mr. Emmanuel, Juliet Eze, and Muri Animashan. So let me start from Muri Animashan. Unmute yourself, introduce yourself, ask a question. We'll take all the questions so Mr. Ayo can answer, take the 3 questions at the same time. So, Mr. Muri Animashan, can you unmute yourself and ask your question?
Yes. Okay, thank you very much for the privilege, sir. Mr. Ibaru, well done for that insightful lecture that you just delivered. Thank you very much. Straight to my question. You've talked about so many things on valuation. You've talked about uniform models, talked about valuation for sustainable development plus governance, compulsory action planning, etc. Factors affecting valuations and all of that, legal, the expert witness. Now, my question to you, sir, is that number one, I have 2 questions. The number 1 question is that how does proper valuation help individuals, businesses, build long-term wealth? Let me take that again. How does proper valuation help individuals and businesses build long-term wealth? Then the second question is that what challenges limit the impact of valuation on Nigerian prosperity and how can they be addressed? Let me take that again. What challenges limit the impact of valuation on Nigerians' prosperity and how can they be addressed? Thank you very much, sir.
All right, thank you, Mr. Mori. So, Emmanuel, can you please unmute yourself and ask your question as well so that Mr. Ibaru can take them all together?
Okay, so thank you very much. It has been a wonderful session. Thank you, Mr. Ibaru, for this wonderful presentation. One of the questions I would like to ask, you actually mentioned, due to the emerging innovation these days where there are advent of automated valuations, and I believe that there is going to be improvement over time. Is there any possibility of the traditional practitioners, the valuers, being put out of office as a result of this automated, system that, could be relied upon by some of our prospects without really engaging professionals? Because it's highly possible for some people out there to want to come up with a figure or a value for their properties before putting it out in the market without actually engaging professionals. So is there a possibility of this innovation, putting out of office, professional valuers, and how can we, the professional still relevant. And then you actually mentioned one of the factors affecting, accuracy in our valuation report, which has to do with limited data. I want to say that is there any suggestion you have to actually help us to be able to have reliable data that would make our report more better off than it used to be? Thank you very much.
All right, thank you so very much, Mr. Emmanuel. So let's say Ms. Juliet, can you unmute yourself and also ask Mr. Ayo your question, please?
Thank you very much, sir. I'm already unmuted. My name is Juliet. I work in healthcare, and we're trying to set up a center. It's a sexual health hub, and I'm trying to we're trying to build the infrastructure or maybe purchase an infrastructure. So it's either we are building from ground up, or we are getting a property that has already been built. So I don't need to explain what we are supposed to be doing at my space. So sexual health is all things sexual health. So the center is supposed to take training center. The hub is supposed to take training center, clinic where we do counseling, therapy, treatment, STD, STI, libido, erectile dysfunction, etc. Then we're also supposed to have a rehabilitation center, still in the same hub, and then a retail store for all the sexual health products, including intimacy products and aphrodisiacs, if you like, for married couples. So we're trying to set up a first of its kind integrated sexual health facility. It's the first of.
Hello? Okay. Okay, that may not be for us. I mean, I don't know, but you didn't get through to your question. If you can still come back to exactly ask what your question. So, Mr. Ibaru, can you take those two questions before we now begin to go into the other questions that we have on the chat box? Yes.
Okay. I mean, each questioner. The first two asked two questions, and then the last person. The last person's question was even the easiest. What you need is a developmental appraisal. That's what you need. You need to call Mr. Olusanjo to do one for you. And I'm sure he will bill you very well. So that's.
I think she's already even saying how do we get the best price. Anyway, we'll get to that. All right then.
How does a private individual business build wealth through valuations? The short answer is that it takes time. And when you look at valuations, there are different reasons that people do valuations. You might want to take a loan, you might want to use as collateral.
Okay, I think we're losing this Ibaru a bit. Hello, Mr. Ibaru, are you back? I think we lost you for a bit. Okay. Let's just hold on the line. I'm sure Mr. Ibaru will find his way to join us. I'm sure.
Okay, can you hear me now?
Okay, Mr. Ibaru, you're back. Yeah, we lost you for a while.
Sorry, I had to change my internet. Okay, so how does a private individual business build wealth through valuations? Now, if doing valuations is your business as a service provider, it means you have to do it well to the best of your ability. It means you have to be aggressive in providing the best possible value. Again, it sounds trite, but integrity is something you have to be sure that you don't drop. I think the other thing is it's a highly competitive market, so you might have to think around how you do your branding and so on and so forth. So I think that's the first question. That's the first question. I think the second question. Okay. Let me know if anyone can hear me. You can just indicate by raising your hands. So I know if
I can
anyone...
hear you, sir.
Oh, you can hear me? Oh, great. So I think it's Sanjo we have to wait for, since he's the one coordinating.
Okay, so sorry, I'm back. I guess there was sorry, Mr. Tayo, please.
Okay.
Sorry about that. Yeah.
Welcome back. So so the second question from the first questioner was, what challenges limits the impact of valuations? So ultimately, valuations are a tool to increase the amount of liquidity in a system. So it means that if the valuation isn't done properly, that will affect its impact. If the economy itself is going through a really difficult time, that will also affect its impact, because there are certain countries right now, in fact, there are certain areas in Lagos that even if you have a high valuation, it doesn't mean the bank will agree to give you the loan. It doesn't mean the buyer will buy the property based on the valuation that you have given them. So it's also subject to a bit of the economic circumstances, which is why you find a lot of people trying to angle for valuation transactions on the island or in high-end areas of Nigeria. Traditional practitioners, how would they stay relevant? Can they be moved out of office? You see, I like that question because I can now explain who a professional actually is. You see, a professional isn't somebody who just takes numbers and then takes books and then writes things for you. No, there's a lot of hard fought experience that goes into a valuation report. There are things that computers can't understand. There are things, I mean, sometimes and this is just me trying to, lessen maybe the tension in the room. When I'm a bit bored, I just ask ChatGPT or any of all these LLMs, what is the state of the Lagos real estate market? And then when he gives me the answer, I start to cancel where it is wrong, just for the fun of it, right? I just have that much fun. My point is, professionals also have something that you can't get from technology, which is a professional opinion. That's what professionals have. They have an opinion as to why this is this. So I have some analysts that work with me, and every once in a while you get a technology response or an AI response. And I say, okay, I've seen your answer. Okay, tell me why this answer is correct. Tell me why this answer is wrong. And tell me why this answer is correct in Lagos, but it is wrong in Ogun State. Confusion. So professionals don't just wear suits and ties. There's actually, real professionals. There's a lot that has gone into the process of telling you what we are telling you. Now, do I think they will be relevant? I think they would even be more relevant, because now there's so much information out there. Who has the boldness and the confidence to say that an LLM, whether it's OpenAI, ChatGPT, Grok, who has the confidence, the experience to say that they are wrong or right and can be believed? That's the thing. So that's why you need. So I think for professionals now, we are even a bit more powerful than we were before, because now we have a lot of data under our feet. But because of what we've learned in the days of analog, we know what is wrong, we know what is right. So there's almost nothing you can say. So I worry for those who are building their professional careers now, because they are building it with the ease of technology, which I think is good. But, there are some things you can only learn by, trekking, by visiting, by making the mistakes, by getting it wrong, by losing a client and getting the client back. So I think professionals will still be relevant. I think traditional professionals, because that's how you put us. You say traditional practitioners, I think will still be relevant, because we can tell you why OpenAI or any of these guys are wrong. We can tell you why the drone shot is wrong. You can't tell us why And when you are dealing with figures, you want to be able to justify your position. And that's the work of a professional estate surveyor and valuer. All right. You are to, that's why they will tell you that there's an exam we write. They call it a professional test of competence or something along those lines. You have to explain why this building is $1 billion. The fact that we are giving you report templates to go and write does not mean if they ask us, we don't know what to say. Are you following me? So we now have more data to work with. We are traditional because we understand the first principles, we understand the foundations. Those who are building their careers now have to worry about whether a figure they got online is right or wrong. I don't have to worry about that. I'll give you an example. I was in an analyst meeting mid last week, and an analyst said the vacancy rate in Ikoyi, old Ikoyi, is 15%. I said, okay, hold on. Are you telling me that of all the houses in Ikoyi, 15 out of every 100 are empty and have no owner? The person said yes. I said, okay, hold on. You tell me why your figure is right. Blank. The person couldn't talk again. That's it. The person couldn't say anything. I said, no, just tell me, just in case I'm wrong, because traditional professionals were open to learning. I said, okay, tell me. No answer. I told him that the vacancy rate in Ikoyi is less than 5%. And I walked him through step by step how I got my answer. My answer will get the clients to sign the check to invest. The government will get me on the next valuation project. You just have a figure. You can't explain it. So how are you different from somebody who just Googled something? Anyway, limited data, how to solve. Okay, so we asked ourselves this question. It's almost a decade and a half ago. And we said we would do two things. One, we will do the work of paying research analysts, paying field researchers, publishing free reports twice or three times a year. And we have done it, thankfully, for about a decade and a half now. That's the one thing we said we would do. It's on our website. You can go and check. The second thing we would do is we would try to bring professionals together to get reports, to get their own data. And for various reasons, both private and both corporate, not many professionals are willing to share their data. Maybe they've signed NDAs, maybe they've signed different agreements, and they really cannot. Although I have to say that over the last 3 years, I have seen more institutions put out data products that did not used to do before. So you have more organizations now. The next thing that has to happen is we need maybe the top 10 or 10 of the leading data agencies in Nigeria to come together and agree on one report. If we're able to do that, then, and we have tried to push that for years. In fact, one of my board members says he's tired. I shouldn't bring that idea to him again. All right. It's just a few of us now who are pushing it, where you get everybody together, 10 of us sit down and say, look, I have my people who get me data in Port Harcourt. I have my people who get data for me in Kano. I have in Lagos. Let's put it together. We all co-sign. I know the Lagos Naives also tried something. They've done a couple of reports also. I know Bosele, go to their website. They have their own reports, right? I know Knight Frank is doing something. I know Dia Fatimile is also doing something. So we need to have that collective and then approach the market with one face. And again, I will try and end with this before I take on the next questions. If Dangote Refinery has shown us anything, it is that when an industry is serious, we will know. When an industry is serious, we will know. So now we have the largest, because we are Nigerian, we have the largest refinery of its kind now, and at least for the next 10 years, right? And it is because one person did it and he built it. And now everybody is now calculating how many shares am I going to buy? Friends are on TV saying he's my friend, though. I begged him to give me $100 million, you know, and so on and so forth. So I think it's a collaborative effort. We've been waiting, we've been searching, we are still here available. So hopefully we will find something concerted. But yeah, thank you very much.
Thank you, Mr. I love the way you answered that question of technology. Very, very. I mean, that's really, I've got people around us who ask this question every now and then, and that's a very practical way of answering. I mean, thank you so very much for that. So we've got a lot of questions, and I don't want to deny these people. Please, from the back end, there are 3 persons who are also raising their hands. Please, if you can do your question, take your question. If you can take one question, just be fast about it. Please bring Michael Marvelous, Namdi, and Benjamin Adams. Please, can you bring them up? Please, can you bring them? Angela, can you? Okay, good. They are here. So, Marvelous, can you unmute yourself? Ask your question quickly. Yes, because we are pressed for time. Michael? Okay, Michael is not. Okay, yes, all right.
All right. Okay, so good afternoon.
Good afternoon, Michael. Please, can you speak up, please? Yes.
Okay. So I don't know. No, mine is not like a question, just an advice. So I'm considering changing my career into real estate. Right. I studied human anatomy and I'm a recent graduate. So according to what I've seen in Nigeria, anatomy is not really I don't know the word. It's not really something in Nigeria. And I just think, okay, out of all I saw oil and I saw real estate. So I don't know. I'm thinking of switching since I don't have any knowledge in oil. I can just gain knowledge in real estate and then switch into real estate. I don't know if you have any advice, that you can just give to those that are
all right.
coming up.
Thank you, Michael. Sure, Mr. Tayo will handle that. Namdi, can you unmute yourself and ask your question as well? Namdi, are you there? Please unmute yourself, ask your question. Okay, Namdi is not asking his question. So please, how about, okay, who else is there? Okay, so please, Mr. Ibaru, can you take that question? Then we quickly go to 1 or 2 more and wrap up.
Whenever I see, and you have to excuse the joke, whenever I see people wanting to switch to real estate as a career, I always blame Oga Boss's Jeep.
Oh my goodness.
I always blame his Jeep. That his Jeep is always driving because okay. Or maybe he wears very expensive tires. Okay. Let me say it like this. It's a very good industry to be in. But it's tough. If no one has told you, it's tough, but it's a good industry to be in. You will meet people, you will have experiences. You will make money, but if you're making it the right way, it won't be early. The money you make in the early stages, no, you won't be too happy in the first maybe year. Because the work will be a lot and you're always going to be learning. I can guarantee you that. If you're in the right team, if you're in the right organization, you're always going to be learning. You will always be busy. But it's tough because you are dealing with assets. You're dealing with property. You are dealing with what people spend their entire lives saving for, right? You are dealing with, if people want to, be very funny, they will want to use property to be very funny with their money. So, it's a good place to come to. Some people are lucky. They make a lot of money very early. But if you want to stay and be a true professional, then it's a lot of work. Naive will give you programs and trainings and CPDs. You'll be up to your eyeballs in reading. You will have a lot of work to do, but I think it's a rewarding career because you get to meet all kinds of people. You're meeting influencers, you're meeting architects, you're meeting the government, you're meeting corporate investors, you're meeting family offices. So when everybody has made all the money they want to make from their business, you are in a meeting with a music producer, right? I mean, John Zazie the other day, or you are with some entertainer who has signed a record deal and then they want to invest in property. And then the next week you are going to Ondo State government who wants to build a road and is asking you questions. So it's a good place to be in, but it's a lot of work. And the longer you stay in the industry, the more you understand how important it is to people. So it's a lot of work. But yeah, I mean, NICE is there to help you out, to ensure that you grow. A lot of professionals are increasingly opening their doors to new hands, but it does take a while to at least get off the ground and become something serious. Yeah.
Thank you, Mr. Tayo. So let's quickly go to, as we begin to wrap up, I mean, a few, just one or two. Ayokole Famo is asking, are valuers in Nigeria sometimes too optimistic, especially in the market where buyers are scarce? Did you get that?
I mean, I understand why he would ask if valuers are too optimistic. It depends on what side of the aisle, if the valuer is on the buyer side or on the seller side. But valuers generally have a pragmatic view on the world. And when you're even doing evaluation, you want to give optimistic, normal, and pessimistic valuations so that everyone has an idea of what to expect. And the truth is, a valuer can give you the actual value, but the market is not just willing to pay that value. If you get what I mean, a valuer can give you the accurate value of an asset. They can tell you it's 100 million or it's 200 million, but the market doesn't want to. And that's what you're going to see a lot of to the young man who wants to enter the industry. The market may not want to pay 200. They might say, well, it's 200, but I only have 150. The bank can say, well, you say it's 250, but our internal estimates say it's 180. Or someone can bring an AI technology tool and say, no, it's 90 million, and you're going into that back and forth. So I wouldn't say valuers are optimistic. I would just say they give you the values as it is, and then the conversation starts. Some people accept the value, they're usually the minority. Some people want to play with the value and make it higher. They're trying to get a loan or get some form of inflow. And then if people are trying to buy the assets, they want that value to read a lower figure. So I think it's more often the environment and the demand more than the actual value itself.
All right. So this other anonymous attendee is saying the book you mentioned earlier argued that poor countries are not poor because they lack assets, but because those assets are debt capital. Is Nigeria a classical example of that?
So, sometimes when they ask you questions, I've seen that question before.
Really?
Yes, and I understand why they would ask that question. And De Soto is right. You can't really say De Soto is wrong, because if you say he's wrong, what is your counter argument? So he does have a point. What I even think now is he has been correct for so long, and not much has been done per his recommendations to remedy the problem. And that's another indicator as to why he is right. We have debt capital. I know the federal government has spoken around it. The Senate president has said one or two things that they want to do to help unlock that asset. But what you will find is solving a property problem takes a bit more of your relationship capital, of your political capital, of your time and effort than most people realize. But yes, De Soto did have a point. A lot of assets that are in the informal markets don't have titles. And because they lack that formality, you can't bring them into our established frameworks, even though there are loan systems in the informal economy that can still provide loans, but at much higher rates of interest. So yeah, Mr. Hernando De Soto had a very strong point. Yeah.
Okay, so if you pleasantries here, I listened to you from the beginning. You made us proud by developing our mind on the purpose of really working around data as it helps us to push our funding and more opportunities in the economy. Juliet Eze, a few questions you've been answered. Don't worry, somebody will reach out to you. Someone is saying, Mr. Yade is saying, thank you, Mr. Ibaru, for your deep insight into our relevance as professionals, grounded in traditional experience and strengthened by access to data. I mean, this is the right word, grounded in traditional experience and strengthened. I love that. Thank you. A lot of saying thank you, Mr. Ayo, for this deep insight. I must say quite a whole lot of appreciation from this end to you. Before I let you go, I mean, this has been a very robust conversation. I want to ask you directly, what reforms? I mean, I know you do a whole lot, data here and there, CEO here and there. I mean, contributing to issues that has to do with our space. What reforms do you believe could significantly improve Nigerians' property market and valuation ecosystem?
So I've thought about this for a couple of years now, and here's where I am in my head today. You know how it is that the banking system is pretty much concluded on their consolidation, where you have international licenses, you have national licenses. I think we need to come up with a system where certain valuers of certain sizes, experiences, and credibilities are the only ones that can be selected for projects of a certain size. That's what I think. Because they now have to bear the burden of ensuring that all the local and international regulations are followed. Because if you are borrowing from the banks, you see that they have to adhere to all the IFRSs, etc. And when you look at even the auditors, you have the big four, but then you have other auditors doing really good work. But what happens is now, one, everybody has to put their houses in order regarding what they agree to as the value for an asset when they are putting it in their reports. And the bigger investors don't have to worry about report credibility. And then the smaller ones know that we actually have to get bigger, either by partnering, or if we're going to stay our current size, then we know we have to even improve the quality of our reporting. So I think that reform around valuation aggregation is important. And everyone else can do valuations. I'm not saying they shouldn't, but we need to think around, if one person has to value all the national stadia venues in Nigeria because we want to borrow money to build a Formula One track and then bring in the FIA to have 20 races in Nigeria, which will grow the economy, then it has to be maybe a maximum of 10 valuers that we can pick from. Indigenous or indigenously led. And that will come down to experience, leadership and management, capacity, distribution nationally, and so on and so forth. A full transparent process. And then we now go down. If we are going to do valuations for this certain band, then these are the people who should get involved. And I think it is one step. We can always tweak it, or we can try something alternative. But I think it's one step. You see, because if you don't have a certain level of organization as an industry, individual firms can make a lot of money, but they would make less than if the industry were more organized. So that's why the lawyers can charge what they can charge, right? Because they are that organized. We can say what we want about them, but ultimately, you see that lawyers are organized a certain way, and the auditors are organized a certain way, the bankers a certain way. I think if the valuers had a way of, so first of all, you must be a member of NAID, ESBA, bond registered, all of that. Then we now look at track record, we look at leadership, we look at credibility. I mean, take for example, you can't have somebody who has been in the industry for 35 years going to bid for a national project with somebody who has just done 10 years. I don't think that counts. I think we have to find a way of making it show that someone has spent 35 years doing something, right? And then there is what you have to call them to. So there are companies that are 30 years and above. You call them for certain projects. Those that are 30 to 20 years, you call them certain projects. Then you can now again do by specialization, okay? So if all you have done for the last 10 years is, as the lady said, healthcare projects, so we know you have more experience, more projects under your belt for healthcare. So we know, okay, fine. Based on specialization, we can call it. Yeah, look, there are many ways we can think about this, but we have to find a way of nationally approaching this matter as it's a reform and then cascade down.
Wow, thank you so very much, Mr. Ayo. I don't want to, there's this guy who said he asked this question. I mean, if you can answer in 1 minute, but he said, how are you adjusting your valuation models to account for current inflation and foreign exchange volatility in Nigeria?
I think every valuer does that. It's not current. Maybe this guy is a modern professional. We traditional guys, we are all of us do. So sorry, to answer your question, I'm not making light of the question, please forgive me. To answer your question, it's a standard approach when you're doing evaluation. You're always accounting for inflation, you're accounting for currency, for oil price, you're accounting for Strait of Hormuz and topical issues, you're accounting for even the elections that are coming, you're accounting for the floods in Lagos. You look for things to account for. That's how you approach it. So what you do is you moderate where you need to moderate the values, and then you do a projection as to how. Because, for example, now, crude oil prices are $127 a barrel. That already changes how the economy should function. But then, a couple of days ago, the central bank left the MPR at 27 basis points, or 27%. So, if I was doing evaluation last month or the beginning of April, there's a way I would have done it, because I have high prices, but then my MPR is okay, because it's a more valuation and this person is taking this thing to the bank. But if I'm doing it today, I will have to adjust a bit because of how the banks have operated. So yeah.
All right, thank you. A few, somebody is asking here, of course, I'll just read. Please, can we have, of course, you cannot replay of this session. You can just ask from a back end. You can actually, we have a YouTube channel. You can go back and I did mention earlier, if you want to enjoy this again, please go over and over. Even for myself, Mr. Ayo did mention something about while he was advising the guy wants to transit. He talks about you have to learn. Even up till now that we're talking, we keep learning. And this is one of the things that we're also doing on this platform now. I must say that we've learned greatly, and so you get that. Somebody is asking. Recommend the book. Don't worry, we'll link you with Mr. Ibaru. If you, we'll try. Just reach out to my back end, Davidson Godwin. Reach out to my back end. We'll try and find a way of, if need be, take that question very well and get back to Mr. Ibaru. The other question from Mr. Alexander. This is. You're asking why is it that till date APBN as a body not an important decision maker to the federal government on professional decision towards the growth of the economy as of today. That's we can argue that as much as we can, but the bottom line is that let's make sure we are doing something to ensure that we make the industry robust, and that's one of the things we're doing here. Mr. Ayo, thank you so very much. Today's discussion, no doubt, one of the things that's made clear is that valuation is far more than a professional exercise. It's more of an economic infrastructure. Accurate evaluations, no doubt, improve transparency. It strengthens our lending system. It supports our investment decisions. It enables wealth creation, and it contributes to directly national development. And that, Mr. Ayo had actually mentioned to us. And again, what Mr. Ayo had done this afternoon is to give us so much to think about and to act on. That's what we've done. To think about and to act on. And I say that for myself, and of course for a whole lot of people who probably are also listening, a lot to think about and to act on. So, and to our audience, we want to thank you for joining us today. For the questions that we have taken, and for Mr. Ibaru himself, and for us, Ubosele and Co. Like I said earlier, when I started, we're celebrating 35 years, and just like Mr. Ibaru said earlier on, talking about this data and all that, I think the time is right for us to begin to tell our stories as practitioners. The things we do. Let's before now, the block, if you need information, you have to go to the big four. But this is what we do. Let's begin to tell our stories. There'll be a lot of here and there, ensuring that it gets better, tweaking it here and there, and until it gets to the point we want it to be. And that's what we're doing as an organization, shaping Nigerian real estate landscape, and that's why we have this conversation. And we're grateful for having Mr. Ibaru. Somebody is thanking me for having for bringing Mr. Ayo. I want to say they should thank the back end, because a whole lot of work has been done to bring you here. And I must say, we look forward to.
Thank you very much, everyone.
We hope to do more of this. I know you're a very busy man, very, very busy, and we do not take this opportunity for granted. But you can be sure, one thing you can be sure is that we'll come back calling, right? And when we come back calling, we'll be glad to have you share your time with us. Thank you once again, Mr. Ibaru. Thank you, and God bless you. And so at this juncture, I want to say thank you for joining us. Have a wonderful afternoon, and we'll share this recording with you. And just drop your email address with my people at the back end. If you need to reach Mr. Ibaru, don't worry. Just just reach out to them. You can be sure that connection with me so that you can reach out to Mr. Ibaru and also to our good self as well. Thank you, and God bless you. Have a wonderful day. Bye, Mr. Ibaru. Thank you.
Bye, everyone. Thank you.
Bye.
Bye-bye.